Hi, I'm Max Keiser. This is the Keiser Report Summer Solutions. That's right, where we come up with solutions to all the problems we cover on the other shows we do. Anyway, today we've got a gold to the moon edition with special guest Mark Valek of Incrementum. Stacy.
There is no bigger solution needed than to the exorbitant privilege that has been the US dollar in the past 50 years, all the trade imbalances, all the trade deficits that are required by the United States, and the mass unemployment that is the result of that US dollar policy. So we're talking to Mark Valek about this. And Mark, I want to ask you, gold has gone supernova again, and it's one of the best performing assets of 2020 so far. How high does this go? And is the price of gold an indictment of the front cover of The Economist magazine, free money?
Hi, Stacy. Yeah, well, the real question probably is not how high is gold going, but how low is the dollar and all other fiat currencies falling. And that's, I think, what we are seeing. This fall has been accelerating recently, as you said. And to the moon, I think I've got a nice comparison for you here. I mean, we've saw this billions and actually trillions of money printing recently, and I did a small calculation. So the Fed expanded the balance sheet by 3 trillion within a very short time recently. So what is $3 trillion? $3 trillion, if you make a staple of $1 coin, this is a mind-boggling staple of 3,700,000 miles. And this is actually 20 light seconds high. So this is actually several times the distance to the moon. And this was just created out of nothing within a few weeks. And that's, I think, the real problem which we are facing. And people are waking up to this problem. And I think that's a very interesting time we're in.
Good analogy there with the staples and all that stuff. It's amazing when you put these graphics and you look at them, how really incredible trillions and trillions of dollars is. Now, of course, gold has been making new all-time highs against just about every other currency in the world except the dollar. Now it's made a new US dollar high. And as you point out, it's an indictment of fiat money. Fiat money is really crashing against gold. Now, going forward, you know, does it mean inflation or deflation, right? This is a weird topic because people have different definitions for these two words. And it usually goes into an interesting conversation. And but what's your take on it, Mark?
My Arnie accent already takes it away. I'm Austrian, and I'm also Austrian in the economic sense of terms. And the Austrian School of Economics defines inflation as this is an increase of the money supply, of unbacked money supply. If you talk about price inflation, then we again have to specify what price inflation are we talking about. Are we talking about asset price inflation? Are we talking about consumer price inflation, and so on? But I mean, this clearly is inflation. I agree to that definition. And apparently we have seen price deflation, which is usually what people refer to when they talk about inflation. So consumer price deflation, we have seen apparently. But if you ask me, I really do not see it. I'm sorry. So at least this side of the Atlantic, with a few weeks perhaps where fuel prices went lower a little bit. But if you go into the supermarket, groceries, in my view, are just going into one direction, and it is up. So inflation is already creeping up, even in the consumer price levels. And I think there's really no other way out. If you want to try to really devaluate these debt bugs, then you just have to reflate, and sooner or later this price inflation will get much more severe.
So Goldman Sachs even just came out in this summer, in July, and they mentioned that the US dollar's role as reserve currency could be, at its end. Do you agree with this? And what exactly happens when it ends as a US dollar reserve currency?
We've been writing about this topic for years in our In Gold We Trust report, and I think this is a gradual process which has been ongoing. This what we are calling de-dollarization. A lot of other people call it de-dollarization, and this is a process, and it could happen gradually and then suddenly, but basically. But I don't think that things will change so soon. I mean, we have this historic precedent of the British pound, which was the reserve currency for quite a while, and this status really also didn't change overnight. I mean, the whole infrastructure is here to do international trade with dollars, but still, I mean, the central banks around the world are increasing their gold supplies and stock, and that's happening for reasons. So they are preparing for a change, and it could happen more rapidly and accelerate also. But I wouldn't go overboard with this topic for now. But that's a topic for this decade. That I would say so. Yes.
Mark, so de-dollarization is definitely a theme over the next decade, and the currency grid around the world and central bankers around the world are all kind of scrambling to adjust to a new world order, I guess you could say. Over there in Russia, the Russian central bank, Elvira Nabiullina, she's the head of the Russian central bank. She converted U.S. dollar reserves into 520 tons of gold in the last 3 years alone. Will history see her as the Charles de Gaulle of central bankers, just as France managed to get 300 million worth of gold before the U.S. shut the gold window in 1971. So too will Russia be the last central bank to have stacked gold before it became unavailable at any price, Mark?
Well, I think that's quite an interesting analogy you bring up. I don't think it's quite comparable though, because you really had this Cold War situation when the gold was there. So you had the West, and within the West, France, which was challenging the US a little bit. And right now, you really have a different situation. In my view, you have the US as global economic power, and it has been challenged by more than one state, and also within a perhaps Western alliance. This is happening. If you look at the gold reserves, Germany repatriated their gold reserves some years ago. But also China obviously is doing this in a large scale. So this is really looking as if we would be going into a more multipolar world. But yes, Russia is obviously very elementary in this development, and the Russian policy on gold has been very consistent, and they are stacking gold, and they probably know why. They definitely have a strategy, and they're, in my view, they're doing a very smart move and preparing for this multipolar global order.
Somebody did point out to us, I believe it was Josh Crum, who used to be at Goldman Sachs as one in their commodities desk. So he did mention that what Russia, you could clearly see, was doing was looking at the oil gold ratio, the gold oil ratio, and stockpiling gold when it only took 17 barrels of oil to buy. Actually 1 ounce of gold bought 17 barrels of oil, and now it's something like 40 or 50. So they've stopped. So you could see them playing the energy versus real money arbitrage, trading commodity for commodity money.
Right, that's also a good point. I mean, there are quite a few analysts who are watching this gold oil ratio. We also featured it in our report, but I think oil still, obviously, undoubtedly, is the number one commodity when it comes to consumption. It's the biggest commodity by far in terms of market value and all that. So it's hugely important from a geopolitical point of view. So this gold oil ratio is something, I think, which one should look at, and I think Josh could have a point there. As you correctly mentioned, Russia stopped their purchases of gold, or paused them perhaps. So that may really be the reason. I agree with George.
Mark, you cover the gold market extensively, and your report is widely read. It's kind of the industry standard, I would say. So you've got your ear to the ground. Let me ask you, what about peak gold? This idea really that we've hit a time now in gold mining where we're kind of running out of gold. Down in South Africa, they're actually getting so far deep into the Earth's crust, they're hitting lava, right? They're just like, they can't go any deeper. Can you give me an update on that?
Well, peak oil always comes up when the price goes up, and I think it's an interesting story. And I mean, yes, obviously this planet is finite, so there are a finite numbers of gold atoms on this planet. But still, I really don't subscribe to peak gold at any time soon, because this is also, I think, proven by the constant stock to flow ratio, which has been constant for many years. So the amount of gold which is dug out of the ground every year is very constant, and it's regardless of the price development. So people really get more and more efficient in looking for gold and searching for gold. But they also can't supply the market, because it's just this magical thing about gold. It has the most constant stock to flow ratio and the highest stock to flow ratio in the material world, at least. And that's why it's such an interesting store of value.
In the second half, we'll talk about hyper-Bitcoinization and the stock and flow ratio in Bitcoin, and how Bitcoin might position itself in a post-dollar world. But follow up on this last few minutes here in this first segment here. I want to ask you about the asteroids. Everybody keeps on talking about the asteroid belt and how there's all this gold in there. And, every single multi-billionaire in America, whether it's Jeff Bezos or Elon Musk, is trying to get it to outer space. Do you think that is actually ever a genuine risk, that we could have this huge supply of a gold-made asteroid?
Well, I mean, ever is obviously a strong case. I don't know about very far into the future, but for the time being, I really think this is always way overblown. This as being a potential risk for the price of gold, that we suddenly start to get gold from out of space. I really do not subscribe to the theory. This actually really reminds me a little bit of the story that one actually can also extract some parts of gold from the sea, from the oceans. And this also always comes up from time to time. It was already 100 years ago, after Germany lost World War I. People said, now we can perhaps find the gold in the oceans. And 100 years later, we're still not able to do this in a feasible manner. So I think asteroid mining is nothing which will come in the next time.
Mark Valek, we're going to take a short break and come back and talk to you some more. Mark Valek of Incrementum, gold, hyper-Bitcoinization, all kinds of good stuff coming your way. Don't go away. Welcome back to Keiser Report Summer Solutions with Max and Stacy, and our guest, Mark Valek, over there from Incrementum. They put out an incredible report. We should check it out if you can. Now, Mark, you are a gold guy who also likes Bitcoin. And that's unusual, because a lot of the gold folks don't like Bitcoin, but you do. So first, can you explain why you seem to go against some of the gold bugs and you like Bitcoin? Can you just describe your journey into becoming a Bitcoin fan?
Yeah, that's absolutely correct. So as you mentioned, we've been looking at gold very intensively for many years. And we are writing a report on gold, and for this report we do extensive preparations, extensive research. We basically cover all the news which happens during 1 year, and therefore we are always looking at what is happening on the monetary in the monetary system, and we therefore also discovered Bitcoin pretty early on, and I think got it conceptually pretty early, because we knew the stock to flow ratio. I mean, back then actually nobody was talking about the stock to flow ratio. We featured it in our report, I think the first time in 2011 or so. That's why we knew what Bitcoin was trying to achieve and is probably going to achieve at the end of the day. It is the attempt of creating a deflationary monetary system, in my view. And that's something very interesting. And also from the point of view of investments, that's something very interesting if you find such a thing early and it actually manifests. then it's a hugely skewed investment, which can make a lot of money. And therefore, we've been following it, we've been investing, and we've been also now offering investment solutions for professional investors. And that's a very interesting time for us as well, therefore.
So, Mark, yeah, you've been covering it since 2011. You take a common sense approach. You look at it in terms of stock to flow, which is a great way to look at it. And you have migrated easily from gold to Bitcoin. And yet, and there's another dimension to this, which is it also fits into an Austrian school of economics, which, again, the gold bugs that are critical of Bitcoin identify themselves as Austrian school economists, and yet they don't identify with Bitcoin. It seems like an oxymoron or some kind of separation there, but you see the connection. So what is the connection, Bitcoin and the Austrian school?
Well, I think Bitcoin is very Austrian. I mean, even the ECB wrote in a paper, I think 2012, that Bitcoin has its roots in the Austrian school of economics. Hayek wrote about the denationalization of currencies in the 70s. I think that probably did inspire the creator or creators of Bitcoin to start this whole thing. And also they were aware of gold, they were aware of the stock to flow ratio, and they put all this knowledge together and combined it with a very interesting technical knowledge and great incentive structure. But anyway, I think it's crucial to think as Bitcoin as a complement to gold. I really want to bring out the message. It's on the one hand it is a competitor, but on the other hand it's very complementary. And again, from an investment point of view, combining these two is so attractive. One can really make very interesting risk adjusted returns with a combination of both. And I think also gold has a role to play for Bitcoiners. Why? I think the problem of Bitcoin still is the volatility, and the volatility could actually be dampened if many investors basically arbitrage the gold Bitcoin ratio. So if Bitcoin rises too fast, they perhaps sell a little of the Bitcoin and go back into gold, and vice versa. So that could actually be something which also perhaps one day even central bankers do, but at least investors could start doing that. It makes a great investment, and it also perhaps dampens the volatility. So I really would like to put out this kind of world view, and would like to hear what you guys think about that, for instance.
Well, I think that's pretty genius, but I do want to talk further about volatility, and let's go to the poor man's gold, silver. Do you see silver following gold and Bitcoin higher in this post-dollar world, or this process of a post-dollar world starting to happen?
Well, silver is a very interesting one. As kind of a gold bug, I'm inclined to say, yes, silver is great, and it's a great investment. It is. But I really, to some extent, see Bitcoin as a little bit of a competitor to silver. I don't think that silver will regain a real monetary role anymore in the world. So for that point of view, I think the upside is not so great, for instance, as in Bitcoin. Still, as you said, silver is the poor man's gold, and during potentially inflationary environment, the upside still is very interesting. But just the case for silver as a monetary metal, I think, has weakened during the last decade since the rise of Bitcoin.
Right, great points there. So to mitigate the risk or the volatility of Bitcoin, you can do some arbitrage between Bitcoin and gold. And the stock to flow ratio for silver is probably not as attractive as it once was, and maybe would be de-escalating in terms of a monetary metal, particularly with a competitor like Bitcoin now, kind of nipping at its heels. And kind of looking at these from the big picture, Mark, we've been following gold. You've been following gold for quite a number of years now. We've seen two major legs of a bull market. We've been waiting for the third leg, which is typically the most explosive leg, up. Are we now entering the third leg of this mega bull on the gold market?
Well, it certainly does look like it, because, I mean, all the fundamentals for gold just look really brilliant. I mean, you've got this huge debt load, you've got this increasingly insane amount of money printing. So, and then you have a chart which technically really looks good, I think. I mean, we saw all-time highs recently, and now gold is back in the media. So I think you put it exactly right. The third part of the bull market is typically the strongest, and that's what we are expecting in this decade. So in our In Gold We Trust report, we talk a lot about the potential developments within this decade, and I think this decade will be a very good one for gold investors indeed.
The other big story of 2020 so far has been the rapid escalation and tension with China. How much do you think that sort of tension is a result of, like, it's hard to determine cause and effect, which came first, the tension or the dollar crisis? Like, was that built into that relationship?
It has a part in there, I think so, but I think that's mostly used as a news bite to perhaps talk about very short-term development of gold. I really think that the long-term, the fundamental problem is the unsustainability of this monetary system, of this debt-based monetary system, which needs to go deeper and deeper into debt and needs to print more and more money. And so it's built into the system that it actually has a limited lifespan, and we're ending the lifespan. So that's, I think, the core problem what we're looking at.
So, Mark, last time we spoke with you, I believe some major economic monetary history has been made, and I need to get your take on it. And that's the creation of negative interest rates. So negative interest rates is, I think, believe it may have started in Japan and Europe. People are saying it may end up in the United States with the world reserve currency. It's never been done before in 5,000 years to have negative interest rates. It's an incredible phenomenon, and you talk to different economists and they'll tell you differently what it means. What's your take on negative interest rates, Mark?
Yeah, that's something fascinating. I mean, it's obviously contrary to all human intuitive reasoning, because I mean, negative interest rates just doesn't make sense on any level. If you ask me, ask an economist, and you get a very different answer probably. I think if negative interest rates do come to the US, then that's probably the final kiss of death to the reserve status. Because, I mean, that's the perfect incentive to really drop your reserves if you are international central bank. And then it's obviously for gold and also Bitcoin, that would be the launching of a hyper bull market. So if they want to do it, yeah, go for it, but it won't solve the problems, and it will make gold and Bitcoin much more attractive, and I think it will reduce the lifespan of this fiat money system.
Okay, so you're an Austrian economist. In the last few moments of this Summer Solutions, offer some solutions to the ordinary investor out there, because Austrian economics really deals with currency collapse, what happens during that time. So how can the ordinary person, maybe they only have 1,000 euros to their name, like how do they start to prepare for this?
Yeah, well, that's a very good question. I mean, I think saving hard money, which is not inflatable on a regular basis, can be actually achieved with also very small amounts of money. I mean, therefore, we mentioned silver is perhaps one answer, but also Satoshis are another answer. So you can really stack these kind of things. You just need to make sure that you don't have too small denominations when it comes to gold and silver, because the prices are really not good for small denominations there. You have an advantage for Bitcoin. So if you're stacking hard money, I think that's a very good first starting point, and you also work on your personal sovereignty. So that's also a good thing in my view.
And okay, that's the individual. What about on the nation state level? What comes afterward? How could Bitcoin help resolve these global trade imbalances that are seemingly a consequence of fiat currency?
There definitely are, I agree. So yes, we need a good unit of account, which cannot be created by any individual party. And then we will also have perhaps balanced trade and also balanced budgets, which are, I think, both important components for a sound economy, for a peaceful economy at the end of the day. And yeah, Bitcoin is perhaps the best attempt we've had to create a monetary system which is out of scope of any single individual or any group who can actually increase the money supply and do this whole trick of inflation. I'm hoping so. I mean, this is perhaps for humanity the chance to really take a leap forward and separate money from the state as we separated religion from the state. I really think that's the mission we have to achieve to get the next big step forward.
Right, Mark. Great solutions for Keiser Report Summer Solutions. Thanks for being on, Mark.
Thanks, Max. Take care.
All right, and that's going to do it for this edition of Keiser Report Summer Solutions with Max and Stacy. I want to thank our guest, Mark Valek of Incrementum. If you want to catch us on Twitter, it's Keiser Report. Until next time, bye, y'all.